Banks predict housing price growth. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee because we're going to have a look at an article which is discussing changes to banks' house price predictions. Now, but before we jump into that, because their predictions of course are arguing for growth now, I want to take you back, just look at some of their previous predictions. The ones which were predicting huge declines or warning about changes to the market. Now, this is the one that, well, got a lot of attention and was repeated again and again and again in the media. It was the RBA, the bank, the Reserve Bank, everyone's favorite bank, everyone. Remember that bank that's so accurate with wage price forecasts? Anyway, they were stress testing 40% house price falls. 40% to see what would happen to the industry guys. Even that alone will concern a lot of people. Some of the tests looked at a hypothetical scenario involving employment falling by 8% and house prices falling by 40%. I've looked at that in a previous video. You've got here the Twilight Zone from AMP, Australian house prices falling, but worse to come. This is in August. All of this stuff was coming out last year. Remember, coronavirus from ABC, house price slide worsens, but first home loan deposit scheme attracts new buyers. We have here news.com. Commonwealth Bank boss expects a 10% price drop. And, another one from news.com. How Aussie housing prices will be affected by the COVID job losses. And you can see there, these are screen captures from previous video talks I've done, all the marking highlighting I've done. Australian house price crash named the major risk for for 2020. November 2019. Again and again, this was coming out in the media, and I was talking about it too. I was talking about it too because we were seeing this all from the media, and it made a lot of sense, particularly with what was happening with the economy. And we're starting to see corrections in different markets right now. It's juiced up, and that's because the government came to the rescue. And I'm putting the conspiracy aluminum foil hat here on, were some of these articles perhaps, put out there to kind of prompt and push our government to intervene drastically in the market. If it got everyone else worried about a market correction, it would certainly get all of the politicians worried about a market correction as well. And if just being reasonable, they'll think, okay, we've got to do something. We've got to do something. We can't be remembered as the people that let the housing market crash. And that's the problem. I'm going to discuss that in the solutions, just where our culture is so obsessed with property here, everyone, in Australia. So how did they come to the rescue? And I've spoken about this before. They kept zombie companies alive. You could trade while insolvent. So that means external administrations for companies are down, personal administrations are down. We're running about half of where we should. That scares me the most, because if you're a business and working for someone, so you give them credit until they pay you that invoice. And in good times, it can be bad enough getting paid on time, particularly if you're in the construction game. 90 days, 120 days, builders will sign anything and just ignore your terms and conditions and pay when they pay. It's just what you got to deal with, unfortunately. So their predictions, we might hit 5,000. You've got home builder applicant. Oh, that's the wrong slide. Anyway, you've got companies with external administration. You've got JobKeeper here. Up to 9% of Victorians were nearly on that, employed people. There are a lot of businesses that didn't need it. There are a lot of businesses that did. I know we can get frustrated with the fact that a whole lot of businesses got a free ride. I know people that that took advantage of it. I don't blame them for taking advantage of it. If the government's giving out free money, do it. Because that's probably one of the few things they're ever going to give you. They're going to take it back anyway. Don't kid yourself. And I suspect that was just to address the impact on Centrelink. Honestly, I don't think our Centrelink officers could have even handled that influx of so many people. They're juicing the market, housing market. And we're seeing that. You've got the RBA cash rate at 0.1. You've got home building approvals skyrocketing for houses thanks to home builder. You've got long-term impacts of negative gearing starting to manifest with a generational divide from those who are in property and those who are not. You've got 5% government loan guarantees, getting in with a 5% home deposit, everyone. That kind of scares me, the precedent that is setting, because that's starting to sound very familiar to the US. And you've got grants at the wazoo. You know, if you combine everything together, you could get up to 88 grand in some circumstances. So why wouldn't people take advantage of it? Sure, it'll heat up the housing market, but you'll get in a house. Okay, we can afford to pay these mortgages now. Oh, it'll go up in the future. We'll make it work. And the super withdrawals as well, which obviously overheated the market. But in some ways, I like the fact that people got control of their own money. A lot of people, the media and the unions and the bank-controlled articles are all, and I see them here, and I'll discuss it because I've signed up to, like, I'm a journalist portal website because I'm a content creator. I've got 30,000 subs, so I've signed up to that, and I can see all the press releases. And you can see just how much bias is in some of these press releases, because it's all different lobby groups and different organizations pushing their agenda. So with the super, you're hearing all these stories about people getting boob jobs, people doing this and this, people wasting it at the casino. But a lot of people, most people, paid off debt. We've got reduced housing supply, long-term due to just council making it hard to develop. You've got the mortgage holidays stopping people from having forced sales. And you've got people all terrified, saving like nuts. So that was the government coming to the rescue after we saw all of those predictions. But let's have a look. Let's have a look at now what the banks are predicting. And this is for a mortgage business. Major banks revise house price predictions. The CEOs of the 4 big banks have outlined what their forecasts are for house prices over the next few years. The CEOs of the big 4 banks appeared before the House of Representatives Economic Standing Committee last week as they answered questions about their lending operations as part of the review of the 4 major banks and other financial institutions. All 4 major bank CEOs were asked about the current heat in the property market and what their expectations were for house prices moving forward. ANZ. The CEO of ANZ, Shane Elliott, was the most bullish of the big 4 banks, reiterating the bank's stance that the house prices could rise by 17% this year. Just think about that. You're saving, you're trying to get a deposit, house prices could hit 17%. Has your wage increased by 17% this year? Hopefully. Probably by finding alternative and varied sources of income. Well, here's another question. For the people in the construction game, have your fees increased by 17% a year? And if they have, has that been driven by you being able to make more money, or by, frankly, costs going up? He told the committee the housing market is another sector showing robust activity. We're going to see this more and more. It's robust. It's robust, everyone. We expect continued gains in house prices before they taper off next year. Much of this activity is from owner-occupiers, and this is where it's different. We're seeing owner-occupiers jump into the market. And we haven't quite seen that before, everyone. I'm just trying to bring up a chart here showing this with the amount of people that are buying in. Come on, Florian, you can find it. You got this. Here we go. So first home buyers are leading the market. We can see here that they've jumped in. First home buyers here have jumped in. Owner-occupiers are jumping in, excluding first home buyers. So these are people, owner-occupiers, maybe upgrading, maybe moving around, maybe buying another house. Investors, they were going down. They're starting to creep in. But we can see from back here, first home buyers have been coming in earlier than the other 2. And with the scale on this chart, it's a bit hard to see, but there it is, everyone. They're jumping in to the sector, or to the housing. What do we have here? So, Mr. Elliott also revealed that loans to first home buyers over the last 3 months are up 75% on last year and across the industry. Those getting into property for the first time are taking out 35% of owner-occupier loans. So people are jumping in. I'm hoping it's just for sensible mortgages, guys. I really am. I'm hoping it's for sensible mortgages and they're not going too crazy with it. Maybe I'm just being naive there. All buyers are being helped by low interest rates, high levels of savings, and government policies, he said. So the CBA. Hang on, I need to get that zoomed right. That's the best I can do, everyone. So the Commonwealth Bank has revised its property price forecast for 2021 on the back of strong growth in February and March, but its modelling suggests softer growth beyond the first quarter. CBA has upgraded its property price growth forecast for calendar year 2021 from 8% to 10% on the back of an extremely strong first quarter. CEO Matt Commons said before the parliamentary hearing in Canberra, We expect house prices will continue to grow during the course of this calendar year and next, but are not at the rate we've seen in February and March, which is quite rapid, he said. We're thinking 8%. Or we were thinking 8%, we're now thinking 10%. So even there, the CBA is predicting it to go up. You've got 17%, we've got 10%. Let's see what the rest are going to have. It's probably going to be lower. Referring to current price growth as a positive, Mr. Common admitted that while CBA initially expected a 10% fall in prices as COVID-19 struck, they only fell 2%. There's been a recovery. Clearly, that's a preferable situation to the alternative. Asked about threats to broader financial stability as house prices soar across the country, he said he is not concerned. We're not overly concerned with what we are seeing at the moment in the context of broader financial stability, he said. The bank's confidence is underpinned by the fact that the mix of buyers don't resemble previous cycles, with owner-occupiers currently making up 75% of applicants. And that's the point of difference, guys. If you're jumping in as an owner-occupier, you're going to do everything you can to keep your house. You'll make sacrifices. You'll do what you need. Whereas an investor, you might just get rid of that dead weight. You won't be as attached to it. Maybe that's not a smart thing to do, but still. The NAB. Similarly, on Friday, the 16th of April, NAB CEO Ross McEwan agreed that house prices are going to be up significantly this year. It may well be in excess of 10%, he said. The CEO added that location was also a factor, noting that dwelling prices in regional areas were currently up 11.4%, while those in cities were up 4.8%. However, Mr. McEwan added the caveat, but time will tell what happens. I cast my mind back to the committee meeting last year, or even before that, when we were predicting house prices going down 8 to 10%. Here we are now talking about them going up. So as we know, house prices do fluctuate for a vast number of reasons. The NAB CEO said he expected the bank's mortgage books to therefore grow, but added that it might not accelerate as quickly as house prices, given the fact that customers are paying down their mortgages at a greater rate because of low interest rates. Chief Risk Officer Shane Dooley agreed, stating, If we just use the last 6 months as an example, just because house prices go up doesn't mean it necessarily flows through in terms of home loans outstanding. So arguably, house prices have gone up maybe 10% across Australia since September last year, but our housing loan outstandings have been pretty stable over that period. Westpac. Also addressing the parliamentary hearing, Westpac CEO Peter King said the bank was confident prices will continue to soar. We have a forecast of 10% housing price increase for this year and next year, Mr. King said. There is not a lot of turnover in the market and stock is very tight, so houses are being well bid. So, I mean, there you go, guys. From one meeting to the next, from 1 year to the next, the banks we've seen have gone from predictions of 10% falls now to 17%, 10% above, strong, robust market. The language has changed, everyone. So let's have a look at some solutions to this because, well, this is the thing. How it can, maybe, all the predictions of it falling, at least in housing, was incorrect. We're seeing something different in apartment prices. But maybe they're going to be right here, or maybe they'll be wrong here. There's the question. Who will know? Long term, we need to reduce our dependency on property. And we've got to remember that media can magnify a message and influence our perceptions of the risk. And we are more inclined to worry about risks. That's just an evolutionary trait. It's how people have survived throughout history. You probably have a heightened sensitivity to risk, so you prepare for it. And you seek it out. You seek out warnings. You seek out concerns. I mean, how do we know this isn't just FOMO coming from the banks? I think it's more so. They don't know what's potentially happening. But this reporting on this increase could generate FOMO. People have fear of missing out and jump into the market. And then you get a snowball effect. You get this, like what's happening with Dogecoin right now. It's staying stable while Bitcoin's going down. So that must mean some of the Bitcoin is going into Doge because it's increasing in value relative to the other. And that's a complete meme coin doing so well. So it's in many ways, it's about perceptions. And I would argue, I mean, here, this is what MediaNet, and you'll see when reports come out, when articles come out from journalists, you may think, oh, why are these all the same? Why are they all talking the same thing? Because press releases are coming out and they're getting the same information. They're just perpetuating it. So we have to be a little bit skeptical of it with regards to the property sector. But it's such an emotional topic. There's so many people that are desperate for a correction to get in. And the fact that we have such, an obviously inflated house prices relative to wages, if any, what's that going to tell us? We're just not going to have the quality of life of previous generations. That's the only certainty that we have with that. It doesn't mean that it's going to correct back to how it was in the good old days. Is that fair? No, it's not. Our economic complexity is going down the toilet. We're not manufacturing everything, and people just getting into houses. So there's a lot of systematic issues here. And the concern is, how can we get off that merry-go-round? And how can we change our culture, everyone? That's the question I put to you all, and I'd like you to answer in the comments, or at least put your suggestions. How can we change our culture? Because I think that's the biggest issue here. We're property obsessed. Maybe a correction is the only thing that can change. But will there be political will to allow the market to? What do you reckon? Anyway, guys, thank you all for watching. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can share the videos. Get it out there, help the channel grow. You can support us financially on YouTube or Patreon. You can buy our merchandise from HeiseSays or Teespring. You can see on our blog, we make some lovely pocket squares. Rachel's handmade them. You can use our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. If you want to help us with our share trading, you can buy some shares, sign up for stake, and once you fund it, we each get 1 free share. Okay? You can also sign up for SelfWealth, where we each get 5 free share trades for the Australian Stock Exchange. And finally, you can use Goldpaster on the Perth Mint or support us via PayPal. I'm a bit on edge today because if you have a look at the community tab, you can see I caught someone trying to rob the place. Fortunately, it doesn't look like he got anything, but it's probably really going to be a kick for me to get this house sorted. So I may cut down on the number of videos I do. I usually try and just get my videos done in the morning, and it's kind of been a bit longer than normal as I've been getting used to my new format, and I've kind of got that down now. So yeah, that's the fun I'm having here, guys. Bastard wanted to steal my scrap metal. Well, there you go. The coppers were asking, do we have any copper around? That's what they were saying. Thinking he's going for the copper. There you go. Anyway, guys, thanks for watching. Like, share, and subscribe, and I'll see you all in the next episode. Bye for now.